Alright, Fred, so we know that you like banknotes. Tell us what are the parameters of the deals that you're looking for with the banknote?
So we look at a number of different options. For instance, another partner and I, we bought $7.6 million worth of banknotes in Atlanta, Georgia for 1.8. We paid 23 cents on the dollar. In this particular case, they were commercial properties, where now we're starting to look at multifamily properties. So we look at buying the notes at 50% or less of their face value. And they're usually non-performing, which means that the owner stopped making payments, because a lot of these guys bought their property when the market was at their peak, and so they're not able to make the debt service, and so over time they just haven't been able to, the cash flow from the properties hasn't been enough to service the debt. So now they're in either the banks don't want to foreclose because they don't want to own a multifamily property, they don't want to be on title, so they're willing to let some of these notes go at a discount. And so that's what we look to do. We look for opportunities where we think we can take over the property. And a lot of times it's $1 million or less, because when you take over a property and you stabilize it, there's a lot more buyers out there that can spend $500,000 on a cash flowing property. Meaning we buy something for $200, we put $100 into it, and then we sell it to Mr. and Mrs. Jones for $500,000. They want cash flow, but they don't want to have to do the work that's going to take to stabilize the property. So we sell them a ready-made asset.
Sweet. So, Fred, also, I'm curious, with all the different strategies that are available in real estate, why banknotes? Tell me more.
Well, the nice thing about banknotes is this: you have more options. If you buy the real estate, you have two things: you fix and flip, or you buy and hold. Those are your two options. Well, with a banknote, if it's non-performing, we have a number of options. One, we have the option where we go ahead and attempt to sell it back to the owner at a discount, and if he's not able, we'll go ahead and foreclose on the property. If we foreclose on the property, well, then now we have the ability to fix it up, and we can rent it because our basis in the property is a lot less than the market. We can rent it and make good cash-on-cash returns and still rent our properties at under market rents. Then once we stabilize the property, we can go ahead and sell them. So we have several options. One, we can sell the banknote back to the owner. Two, if the owner starts to perform and make the payments, we can actually then take a performing note and sell it to somebody else. Three, we can foreclose on the property, stabilize it, and flip it. Or four, we can stabilize the property and hold it and take the cash flow over a period of years and then flip it.
Nice.